This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. Today on the podcast, I have Mike Bellafiore, and Mike is the author of the Playbook. And Mike trades an entirely different style than what I write about in my 5 books, in my film, in my podcast, in my blog. So for those of you out there that say, I'm only a trend-following homer, and I don't put other styles of trading out there, well, en contraire, here is an example. So listen, let me jump right in. I want to read something that I got out of your book that, given that we are coming, at least in some of our work, from different spheres, same trading world, but different spheres, there was something that I think is a great opening few sentences I wanted to read that I think will give us a nice conversation. And this is from your book, The Playbook. Quote, "We spend too much time in the trader blogosphere discussing why traders fail. With 1,000 theses abounding, I'm told, anecdotally, there is way too much wasted negativity about this across trading forums. Pro traders tell me these forums are disproportionately visited by failed traders or frustrated wannabe traders who mostly leave an oasis of misinformation about trader development. But did they really fail or just learn that trading was not their passion?" That's a great, I love that piece of writing. I think that's just, and we could probably apply this to a lot of areas of life, couldn't we?
We could. And at the end of the Playbook, I talk about trading's real reward, the real lesson you learn from becoming a successful trader. And that reward doesn't necessarily have to do with profits. But yeah, I mean, that's a really important passage of the Playbook, which is there's a lot of people out there that really think that they want to become a professional trader. There's a lot of people that try to become a professional trader. Maybe they open up a retail account. Maybe they go and join an arcade, a place where you put down some but the firm necessarily doesn't take on that much risk on you, but if you make it, great, and if not so great. But there's a very low entry for barrier to trading because of the expansion of online trading and arcades that are searching for new blood. And what has happened, I think, is that some of those people have made a lot of noise on certain forums that enjoy that type of negative banter back and forth about arcades and trading as a whole. And I think alternatively, there are people that try very hard initially at trading, but in the middle of it, they recognize that they're not able to sustain their energy to become really great at this. And so I wrote about that in One Good Trade, my first book. We hired this guy. I interviewed him, and he gave the most convincing answer, Michael, about how he was going to be the most energetic, hardworking person on our desk. And so I brought this gentleman in, and I said, why are you going to be somebody who works really hard? Because that's what's going to be necessary for you to become a really good trader. And he said, you know what, Mike? I went to school. I wanted to play basketball. My freshman year, the coach told me I was probably going to be cut before my sophomore year. And I worked harder than anyone else. I worked on my diet. I worked on my game. I worked on my footwork. And by the end of my senior year, I was all everything. And that stood out to me. I'm like, wow, this is a guy who's really going to work hard. And he shows up at our desk, and what happened? Well, what happened was he led the desk in checking out the ESPN NBA page. And he was the last one in and the first one out. And when experienced traders would come over and give him advice for things that he ought to change about his trading or things for him to study, he wouldn't do it. And it wasn't that he wasn't a hardworking person, because clearly he was. Clearly he had worked very hard at basketball and other things in his life. And clearly he was a hardworking person. And clearly he was somebody who was passionate about certain things. It wasn't trading, or it wasn't trading for a long enough period of time for him to find out how good he could be. And so
it's a great point. It's just a great point, because it really gets at, look, I don't deny the statistical landscape when people want to talk about survivorship bias and the like. However, I find so many people that want to look at raw data and say, oh, here's a list of, I don't know, professional traders that failed or something like that. And nearly every time they don't get into the why. Like, why did people fail? Like it's a worthy discussion. And sometimes I find it's just ignored.
So I get asked that question a lot, Michael. People will come in and say, hey, what are my chances of success? And look, if you become a successful trader, your chances of success are 100%. And if you are somebody who doesn't make it, your chances of failure are 100%. There are things. If you become a successful trader, the thousands of people who failed before you are irrelevant. This is clearly, and I think not enough people talk about this. Obviously, you are one of the people who does a wonderful job of laying out really what it's like to do this at a pro level. But to do it at a pro level, this is hard. There's a very fine line, even for a pro, between making seven figures and being down $350,000 in 1 year, particularly for the type of trading that we do.
You know, let me just interject real quick an example here of something that's not even trading related that you and I also have in common, which is authoring a book. Now, I'm sure you've heard this a zillion times. How many people will come to you when they hear that you are an author, even if they don't know about your trading world, they hear you're an author, and they'll be like, I want to write a book. I want to write a book. And the thing is writing a book, to me, is not hard. Writing a book is like, here's the deadline. I'm going to write the book. And I think that's kind of what you're getting at too. You've got to, and you've got to love it too. You can't just fake it. You can't just dial it in. You've got to kind of say, I'm going to do it, and I love it. It's kind of an intertwined pair there.
So I think writing a book, I think you're being very modest. I think that writing a book takes an amount of discipline that is quite challenging. And the writing of the manuscript is the easy part. The editing is the hard part. That's the part where there's almost no reward in it. You've written your ideas out. You've gotten your intellectual curiosity out of the way. And now it's line by line, time after time, word by word, figuring out if this is actually correct. And so, I mean, it took me about 18 months to write my last book, the Playbook. So anyone who writes a book, I have immediate respect for, because I think it's one of the harder things that I actually have had to do in the totality of it.
But anybody can do it if they say, I mean, I think that's ultimately when I read that passage too. It's like, where's all the failed book writers? Well, okay, but you got to do it, you know? And anyways, I'm kind of going off on a tangent. Listen, let me start from the beginning here, because your trading is coming from a different place than some of the things that I write about. It's about some of my world. And I think maybe it might be good just from the top to define a little bit about your history, and maybe even just define prop trading from your standpoint. And I should lay out, just so the audience knows from the very beginning, Mike is trading very, very short time frames compared to my world.
Indeed. And so I went to law school. Before that, I went to college. I was a Division I athlete. I spent a couple of years working in politics. I went to law school. When I was a third year in law school, one of my best friends from home Steve Spencer, invited me to a birthday party in New York City. I took the train in, and Steve and his roommate from Wharton, Jared Cabin, cornered me in a room and started talking to me about this thing called intraday trading. I call it intraday trading. Other people may say it's day trading. I have a personal bias against not calling it day trading for lots of reasons. I call it intraday trading. And so they told me about the amount of money they were making. They told me about what it was like. And it sounded really cool. It sounded a lot better to me than reading a bunch of briefs 12 hours a day and perhaps not making that much money. And so I knew when I was a third year in law school that I didn't want to be a lawyer. I have a tremendous amount of respect for people who become lawyers, but it just wasn't for me. And so I was looking for something challenging. I like the idea of being in the city. I like the idea of unlimited upside, but I'm not somebody who started trading when they were 7. It was the best opportunity that was presented to me at the time, and I was relying upon 2 very good friends about my choice. And so I started trading very quickly. I made enough money to be able to trade my own account. That was the goal back then. You started with a firm, and you needed to build up enough savings, we call it a bank, to be able to trade your own money. And so I did that pretty quickly. And for the next 8 years or so, I traded my own account. And then I started to think about my life. I was getting a little bit older, and trading, for whatever reason, just trading, wasn't a big enough challenge for me anymore. And I wanted to do something more. I wanted to do something different. I felt like the skills that I had weren't being best utilized just being a trader. And so I had this crazy, egotistical, naive idea that I would start a prop firm. And, I say that very honestly. It was probably, I didn't know what I didn't know. And that was a good thing, because it's a tough thing to run a prop desk.
Why don't you define that for a second? Just define that for the audience from your perspective, what it exactly means, so people are following along with you.
Yeah, so a prop desk is a place you go where the firm backs your trading. The firm takes all the downside. The firm is responsible for getting you wonderful technology that will help you find more of the setups that make sense to you. Today at our firm, that also means giving our traders the technology to be able to auto trade. It means creating an environment where traders are sharing their ideas with you, so you have more of them. But essentially a prop firm is a place that gives you technology that is proprietary, that's going to give you an edge. And it's going to take care of the downside. If you rip it up, you can walk away. Hopefully you don't do that, but the downside is on the firm. And it should give you a bigger book than you can have just on your own.
Okay. Well, let me let you continue, because you've got to the point now where you're setting up your prop trading biz. And I don't know if you want to tell it, but there's a beginning of your book is an interesting story, and I think it's interesting in the sense that a lot of trading books are sort of dry, and you get very personal about some of the events going on in your life. And by no means are you trying to paint that everything that's happened in your career has been a straight line. There's been quite a few ups and downs.
Yes. So the beginning of the playbook talks about a down period for myself and for my firm. And so we started from scratch. I started SMB Capital from my apartment. We started with 4 people. It was Steve Spencer. It was one of my friends and this guy Mervin, who was just learning. And we built it up. We built it up to about 80 traders. For about 3 years, we did really well. And
why don't you define the time period we're talking right there when you said 3 years?
Yeah. So from about 2006 to about 2009, we built it from nothing to about 80 traders.
Okay.
And we were doing really well. We did really well in 2007 with subprime just starting. We did really well with the collapse of some of the banks and certainly the historic down move in the marketplace. We captured a lot of those moves. And then we had these traders who we had built into very, very profitable traders, very successful traders, and again, who had never made money before they came to us. But they had been with us for maybe 2-3 years. And we had a business model, Michael, at the time where all we were really offering was for a trader to become profitable as an intraday trader and then get bigger. But we weren't trading options. We weren't offering auto trading. We weren't trading futures. We were just trading U.S. equities on a short-term basis. And at that time, people started to learn that some of our guys were getting very good. And other firms started to figure out who these guys were and offered our guys deal structures that we really couldn't compete with, and or it wasn't in our business model to compete with those other firms. And so we lost some of our traders. We lost a decent amount of our traders, and that was tough. That was tough on many levels. It was tough personally to see people that you'd work with for so long kind of pick up and go for move across town for a better deal. But they did.
You sound so calm about this, and when reading your book, there is a certain intensity to being at the time frame that you are in your trading, and you sound so calm. I sound more out there than you do.
I think it was some years ago, so I can tell you that I'm not always so calm. And it was disappointing. I mean, it was really disappointing to work with people and to see them leave, on a personal level, on a professional level. I said this in the book. I mean, maybe I should have been more business-like about it, but it took me some time just to sort of get over the fact that these guys weren't staying. And then at the same time, contemporaneously, HFTs started to become more prevalent. They had been there for some time, but they started to get better, and they started to take away some of the trades that we had taught our guys. So when we first started SMB, we taught people how to momentum trade. We taught people how to micro scalp. We taught people how to intraday momentum trade. Those were the two strategies that we mostly employed. And HFTs started to gain those strategies out of the marketplace. And so in 2009, we started to shift the way that we traded back to the way that I first started trading. And we went back to being more relative strength traders, more intraday swing traders, I say, and holding things for longer periods of time and evolving and changing, because the market was adapting. And you can yell and scream all you want about HFTs, but they were there, and they were better at certain strategies than we could be manually. Algorithmic trading programs can buy and sell stocks faster than you can blink your eye. You just can't compete on certain micro scalping strategies and certain momentum trades with them. And so guys on our desk started to not make as much. And I think that was part of the reason perhaps why they were looking for better deals, is they were trying to make a little bit more. They were trying to make as much as they had made in the past. So we had that. That was a big challenge. Definitely, initially, we saw some of our profits decrease from 07 and 08 as we were pushing our guys to trade differently. And then we got embroiled in a third-party dispute. The person who was our landlord / business model legal partner was investigated by the SEC. And we were actually sent documents we were asked to provide lots and lots of documents about this other firm, this other party. And when you first get anything from the SEC, even though this was just us being a witness to another party, it was probably one of the lowest moments I've ever had in my trading career. I just remember my partner telling me that we had gotten the subpoena. You just feel like you did something wrong just by the fact that you were sent these documents. And I started to think about, were we doing something wrong? Was there something wrong with our business model? And, we had everything scrubbed by our attorneys. We certainly are incredibly ethical people and couldn't think of anything that we had done wrong. But it's when the government provides documents at you, even though they weren't about us directly, it was very nerve-wracking.
Look, I got to tell you, if you get a refund check from the IRS, it's nerve-wracking. Anything that comes from the government is nerve-wracking, right? I mean, seriously.
It was, and all this was happening at the same time. And so the other personal thing that was going on, and we got through that, and we hired a really good attorney, and we provided all the documents, and it turned out that the other party was clean and the SEC was happy with the documents that they had provided, and it all worked out. But it was very, very nerve-wracking, and something I hope never happens again, to the point where we run our firm with the motto of, if any form of government agency ever looked at anything that we would do, we would never want them to even ask a question about what we were doing. So that's sort of our standard. And so at the time, on a personal level, my dad had a stroke. I was in Arizona doing a talk getting ready to do a talk for a meetup, a really good meetup in Arizona, a really big meetup. They've done a wonderful job growing that community. And I have this personal respect for people who are trying to get better at anything. And they grew this wonderful meetup out in Arizona where people are coming together to try and get a little bit better at their investing or their trading. And I feel like somebody like myself has an obligation to go out there and encourage them and applaud them for the work that they're doing, because all of that makes for a better market. The more better educated investors and traders there are out there, the better our markets are going to operate. And so I'm out there and I get a phone call from my mom, and my mom is distraught and tells me that, something's happened to my dad. My dad has had a stroke. And my mom puts my dad on the phone, and I don't recognize my dad. It's this person's, he can't really talk. I mean, as I say in the book, Michael is not said the way he normally says it. He just is, he's had a significant stroke. And so, I start to, tell my mom, look, I'll be there as soon as I can. I try to figure out how to get there as quick as I can. And I go there and I get my dad out of the hospital, and we got him into a rehab center. And I spent, a couple of weeks every, 8 hours a day, just helping him rehab, from somebody who was just in a bed, who couldn't talk, couldn't move, couldn't speak. And we sort of day by day, exercise by exercise, got him to the point where he was actually able to get up and walk, and his speech improved, and he was making a recovery. But 10 days into this, my mom passed away. And she didn't just pass away. My wife and I found my mother. She had fallen down and hit her head. And we found my mother, and so all of this was happening at the same time. And it was a tough time. I took a step back. I couldn't really go to the office, just psychologically. I couldn't trade. I had to be there with my dad, also helping him rehab, continuing to get better, making sure he was okay. And so that was a rough time, and we had to rebuild. And so here I was with my dad rehabbing in Long Island, losing some of my traders, worrying about this SEC situation. in a market environment where we needed to adapt. And what came of that was something good. And obviously every day I miss my mom, and I would do anything to have my mother back. And anyone who's ever lost their mother, it's something that is probably, it's a terrible thing. I mean, I would love to pick up the phone and talk to her about our new son and the fact that he's bigger and stronger and smiling, and you just can't do that. It's a very painful thing. And so, but I created something good came out of this, which was the Playbook. And, it was an exercise that I created to be able to give my new traders that we'd been working with direction, to help them learn how to find the setups that were making the most sense to them, to give them critical feedback, which is essential to becoming good at trading, for the work they were doing, to help them to trade on a longer time frame, from that micro scalping momentum trading into more what we say are trades to hold, to be able to get them to have a system to trade bigger. And so the genesis of the Playbook is me being remote, trying to help my guys do all these things, and we documented that in the Playbook.
Let me jump to a section in there, and I'll read these really quick, and maybe you can pick one or two to elaborate on and maybe explain it from your perspective. And you've got what you call the 10 attributes of a great trader. Number 1, you have his heart and courage. Number 2, intuition. Number 3, vision. Number 4, discipline. Number 5, decisiveness. Number 6, patience. Number 7, confidence. Number 8, focus. Number 9, being dynamic, fluid, flexible. Number 10, willingness to learn and improve. I think most people would probably say that for almost any walk of life, all of those things are very important. But perhaps maybe you might pick one of the 10 and elaborate why it really, or is there one of the 10 that, I don't know if you have those rank ordered or not, but is there one of the 10 that speaks to you more than the others?
Well, I think that you wrote about this in Turtle Trader, which is it's not sufficient to have a trading system. It's not sufficient to be taught a trading system. You need a trading system. You need a profitable trading system. But that's the start. That's the start. Markets will change. There's a lot about you. There's a lot about your personality, your psychology that colors the data that the market is providing. And people need to recognize that. If you were to ask me, Michael, what's the one thing I really want to see in a trader, it would be mindset. And I wrote about this in the Playbook. The best example that I've ever seen from any of the traders that I've ever worked with is Shark. He has the best mindset of any trader I've ever worked with, and it's no coincidence that he's one of the best traders on our desk. He started from zero. He didn't go to an Ivy League school. He wasn't a former Division I athlete. But he turned himself into a very successful, profitable trader. And his mindset is one where he comes in every day and tries to get better. A really good example of that is our guys have been learning a new trading technique for trading on the close. This can be a very profitable, very quick hit technique for those who trade it correctly. And these guys were learning it from another guy in Austin who is a very, very big trader, certainly a 7-figure trader. And so they're learning this new system. They're learning this new technique. And one of the guys starts to employ it, loses money. Shark employs the system, loses money. Shark, you can just sort of see him brushing it off. And I remember hearing him say, that's the cost of doing business. I'm learning this new technique, not too concerned about it. The other guy is cussing and banging and screaming and really upset about the $50 he just lost trading this new system. Obviously, they're not trading you with size at the beginning. And so just think about that. Think about going to work for 2 straight years and always trying to get better as a trader. Every trade that's made, taking a learning lesson out of it. Every night, reviewing your work, looking for the setups that made the most sense to you. Being prepared every morning. Over the weekend, reviewing weekly goals, what you did well and what you didn't do well. Every day, every minute, trying to get better, and think about that compounding over years, and then contrast that with somebody who goes in there and from day one is trying to make 7 figures and is only concerned about the results and not the lessons they can learn from each trade. That's a very powerful distinction.
Let me interject here on something that I've been thinking about as you're talking and going through your book, and vastly different time frames in our worlds. And I had a conversation with Patrick Boyle the other day, who had trained under Victor Niederhofer, and Patrick trades very short-term systems, very quantitative. And he kind of talked about the idea that, and I was thinking as you made the comment about, hey, this was the first opportunity I was presented. And there was, back in the day, if Salomon Brothers would have hired me, I would have probably gone a different direction. So there's that weird thing of sometimes what's just presented to you. But as I think about these different styles of trading, let's say very short-term trading like in your world, or perhaps longer-term trading like in my world. In fact, I know some people that specialize in trading weekly bars. I think there might be some prop traders who might just kind of, if they weren't familiar with that, they might kind of look at you like you were an alien. But I'm wondering though that if from your perspective, if you've nailed down a certain psychological profile, because I don't think, and maybe I'd be different at 25, I don't know, but at 45, I know for sure no. I know I couldn't sit down and be in front of the screen. So I wonder if you have, to some degree, determined that there truly are some personality types that the very short-term trading is just not for. And then on the flip side, just so I don't make it sound like I'm making it sound negative, that there are probably some guys who can sit in front of a screen all day, do the very short-term trading, and it's like a walk in the park, and their blood pressure doesn't jump a bit. Am I going in a direction for you to elaborate on, or am I just kind of wandering in the wilderness?
I think you've hit upon a really important point. I think you're spot on. So, one, I think to clarify, there's been an adaptation and certainly an evolution for the type of intraday trading that we're doing now on our desk, and that perhaps some of the other successful intraday firms are doing as well, which is there are a lot of intraday traders, Michael, who are swing trading, making longer term trades based upon what they're seeing on the screens on an intraday basis. So there are more intraday traders trading a little bit longer term, but not like 2 trades a year, 3 to 5 days. So they are, in those trades, you don't have to sit there and watch every tick in. So I think I want to clarify that. Secondly, even on our desk, Pippin is a perfect example who I wrote about in the book. Pippin is an example of somebody who is an incredible micro scalper. He will be in something when it's going up. If it goes up 10 cents, he might hit out of it and move on. He will hit something when it's going down. If it stops a point into the down move, he'll get out of it. He is an old school, amazing scalp trader that can get in and out of the marketplace on the shortest of time frames, even with this influx of HFTs. And he's very unusual. But I was saying to some of my newer guys, we had a new class start in September. I was saying to some of my newer guys that Pippin in the book is an example of somebody who really still can micro scalp. And if I were to go over to Pippin and tell him to swing trade, I would do irreparable harm to his trading career. He should not be swing trading. He should be micro scalping the heck out of the marketplace. And it's my job to go get him more micro scalping opportunities. And so one of the things that he's actually doing right now is trading OTC stocks, which is a dangerous market for a lot of people. But for someone who's interested in micro scalping, there are a lot more opportunities there for him. And I've been, every once in a while, I'll sort of say to him, hey, yes.
Define micro scalping for everybody really quick.
Yeah, micro scalping literally is.
It scares me. It sounds like micro scalpel, like someone's going to cut an incision in the side of my leg or something.
It is trading a stock for the very next move that it will make. So that move may be a second, it may be 5 seconds. The very next move that's coming, you become expert in gaining an edge on trading for that movement.
Seriously though, for guys that do that successfully, and people always say, well, Mike, they say to me, Mike, you rip on short-term trading. I've never said it's impossible because I've met many professional guys that have done it. I just think it's terribly hard. And from a personality standpoint, what you're describing right there, I just see like the EKG meter just kind of go up. But like I said to you, my question is, I imagine that in your world, there's plenty of people where this is just a walk in the park.
So again, I completely agree with you. And I have said to guys on my desk when we talk about micro scalping, look, it's my job to lay out a whole bunch of different ways for our guys to short-term trade. And that is the spectrum from micro scalping to swing trading. As for myself, I'm more of a swing trader. I'm more of I want to find things that are going to trend for 3 to 5 days. I want to find weak stocks and get short and capture that short-term trend for 3 to 5 days. I want to find stocks that are strong and capture that long-term trend for 3 to 5 days. For instance, when Facebook broke out recently, when there was really good news about their sales for mobile devices, I've been in that trade for longer than 3 to 5 days. When gold broke out, when GLD broke out above 130, I started to trade that on the long side for a swing trade, and then we started to see some resistance at 138 and get out of it, moved on. So for me personally, I say to my guys, I'm too old to micro scalp. It's too stressful for me to micro scalp. But Michael, for somebody like Pippin, he crushes it with those setups. It's completely wrong for me to try and get him to trade more like I do. He wouldn't make any money doing it. And so he is somebody, it is absolutely much harder to micro scalp than it was when I first started trading. And I tell my guys that a lot of them are not going to be able to do it. To be able to process information that quickly, to be able to have the personality not to trade on tilt based on all of the failure that's going to come from trading like that, is very, very unique. And so even of the group of short-term traders, very few are going to be successful at that strategy, but some are, and he is. And so we encourage him to stick with those setups and trade them more, and he is. And so he'll be in and out of anything that's moving. But there are a lot of guys. Yeah,
I think you're bringing up something though. It's I think with anybody in whatever walk of life they are in, whatever their expertise is, if you develop an expertise, everything kind of slows down, and you don't feel the same rush or anxiety that you might have felt when you were starting out. And I don't know if this is a great example, but I was just thinking about, well, we kind of know that via actions by the Fed that we kind of go in these boom bust cycles in the last 20 years. And I don't think it'll surprise anybody if there's another 50% draft down in the S&P at some point in time. won't surprise me at all. And the day or whatever it reaches the bottom and you flip on CNBC and everyone's panicking and panicking and panicking, I can imagine the vast majority of people that are not prepared for or not used to the idea that they could watch 50% of their long-only mutual fund investment disappear. They would turn on CNBC and they'd be looking for signs of comfort, or they would be, I don't know, along with other misery. Where me, I'd probably be flipping it on and kind of looking at some kind of strange propaganda message or something that has nothing to do with what most people are ever looking at. I'd be kind of like, oh, that's, you know. So I think there's that kind of slowdown process that maybe that's where I'm really getting at, that I'm sure exists in your style of trading, in your world, and with guys that you work with.
Yeah, so totally agree. When we're trading, when Pippin is micro scalping, he's looking at chunks of data in the marketplace. And there was a great book written by Dan Coyle that talks about really how we become great at anything, called the talent code. And the best in any field, their brain learns to chunk large pieces of data that a amateur would look at and be incredibly confused looking at. And that is where the slowness comes down. And as a former athlete, when you're playing really well, there is this sense that everything is moving in slow motion. And this mastery that you're experiencing at the time is like you're floating above everybody else.
Mike, I think maybe we had this conversation before. I can't recall, but what was your sport?
I played baseball in college.
Did you? Okay. Not a pitcher, right? Though you were an everyday player.
No, I was a pitcher. Actually, pitcher? Yeah.
I was just thinking of the. I played my first year in college, not at Division I, but I was just thinking that some of the times what I could think back to hitting the ball right in a home run or something. Sometimes you didn't even feel the ball. It didn't feel like you were swinging, and everything felt like it was in slow motion. At that moment of, and baseball's a tough. You know this is more than I do. Baseball's a tough one when it comes to the mind and being able to have that mind be relaxed in that kind of state of. I had a buddy of mine who pitched up to AAA, and he used to always say he admired Lenny Dykstra so much because he could tell that Lenny Dykstra did not remember the prior 10 seconds, and that was part of his secret to success.
Yeah, and that's true of trading, right? And I think that you talk about this for trend following, which is the hardest part of trend following, is to actually stick with the system after having a drawdown.
Yeah.
And as an intraday trader, I'm going to be wrong a lot. And I tell it to the guys that I'm teaching and to the guys on our desk. I wrote about that in my first book, One Good Trade. That's sort of the thesis of One Good Trade, which is make a good trade, whether you win or whether you lose, move on. I use a great thought from Mike, from Coach K at Duke, which is he teaches his players, next play, whether they're up 30 or whether they're down 30, next play. They're up, next play. They're down, next play. And that's the way we think of trading at our firm. One good trade, one good trade, one good trade. If the last trade was losing, no matter. If you see a good risk reward opportunity in front of you, take it.
Well, it's process versus outcome. And that's like number one, probably, for just, once again, anything in life. You're not going to win every time, and your process has to be a sound process and be prepared to take those losses as they come. But if you have a sound process, you got to stick with it.
Yes, absolutely. Absolutely. And I wrote about process a lot in One Good Trade. And in the Playbook, we try and give traders a process for them to be able to build a playbook that makes the most sense to them.
Well, listen, I can't keep you this morning, but I want to let you take a moment to tell people where they can go to find out more information on you, Mike. So what's the best place? The book, they can find the Playbook on Amazon. That's at all the regular places. Are there any regular places really? It's just Amazon, isn't it? Where else do people buy books besides Amazon? I mean, as an author, do you worry about anything except Amazon? They always tell you, oh, you have to go do something at Barnes & Noble. Why? No, I don't. They're not even part of the game. It's Amazon. That's it, right?
I think you're probably right there.
Yeah. So
I write. So like you, I have an active blog. If you want to know what I'm thinking, you can go to smbu.com/blog. We share lots of trading advice and stories that we're seeing in the marketplace each day.
And the Playbook, like I said, once again on Amazon. And, I enjoy having the different conversations because I think even though people can come at the markets in vastly different ways, ultimately, there's some huge commonalities, and I always bring it back to perhaps being an entrepreneur, which is something we both have in common as well too. But ultimately, any good trader is a good entrepreneur. So what comes first? I ultimately think being a good entrepreneur, and I think for people out there in the audience listening, it's hard to wrap your arms around, but I really think looking forward into the future, that's the magic elixir. I don't care if you even become a trader or not, but becoming an entrepreneur is terribly important for the future, or at least your future, unless you want to just be a desk jockey working for the man, waiting for them to fire you at some point in time. Now, I'm not saying that's your opinion, Mike. That's my opinion. But you know what I mean? It's like, I think being an entrepreneur is so satisfying to go out there, hunt, kill, make something happen, and come home. And until you've experienced that, I don't know if you've experienced life, but
I agree. Two points about that. One, in our business, the business model that I used to start SMB Capital and grew to 80 traders is a business model that I think isn't going to work going forward. And we've radically changed our business model from come in, learn how to become an intraday trader and get bigger, to now what I think is the future of trading for people who trade like us, to be, yes, become a good intraday trader, yes, get bigger, but learn how to express those ideas in other products. And I think also learn how to build auto strategies, learn how to become one of the quants. And then finally, and I think this is coming soon as well, learn how to express the trades that are working for you in other markets. And so I think firms like ours need to be in that space to be able to give the infrastructure for their traders to be able to make as much as they want. And then from the trading perspective, excellent point, which I totally agree with, which is, yeah, traders are going to learn certain setups. So I'll expose my guys to a bunch of different setups, and then they'll pick the ones that make the most sense to them and build a business from that. But they're going to have to create new setups based upon the skills and the foundation that we've taught them to be able to make as much money as they can. And somebody like me can expose them to lots of ideas, but I can't possibly teach them all of the setups that they might be good at. And so they have to push themselves. And one of the better traders on my desk trades a strategy that I would have never even thought of it. A lot of it comes from the basics of what I taught, but the way that they apply it is so creative. I never would have thought of it. And as a trader, I think that's a really good way to think of it, which is it's your business and you got to keep thinking about how to make it better.
You know, the amazing thing is a lot of people think, because I've taught some in my career too, a lot of people think, I'll get feedback from a certain type of person, and they seem to think that if you don't put it on a quote silver platter down to the last decimal point, you're not doing your job as a teacher. And you know what? I've got it to the point where it's like, okay, you know what? Enough. You're not doing your job as a student. You're lazy. And you're not going to win anyways. So, it's just not going to happen. And I think it's something where maybe I've reached that point in my life where you just kind of point it out, where it's a two-way street. Hey, I can maybe give you a head start. I can give you some pointers. I can give you some ideas. I can give you some systems. But you correctly lay out, Mike, that it's more than that. It's also something internal. And if you don't have that thing internal going on, don't turn around and point the finger at me. Point the finger at yourself. Look in the mirror.
I totally agree. 2 points about that. One, and this is really important, there are 4 ways you become great at anything. First is domain knowledge. And so somebody like me or other trading educators, our job is to teach you everything you need to learn about a certain product. But that's not the end. That's not sufficient to becoming a really great trader. The second thing that's really important is the ability to sustain your energy, your motivation, your passion. You have to bring that to the table. You have to be the one doing the work every day. You have to be the one pushing yourself. If you don't, there's nothing an educator can do. And that's when I say it's okay if you fail because this wasn't your passion. If you don't have step 2, you probably should be doing something else anyway that you love. And the third thing is you need critical feedback. You need really good coaching. No one has become good at, very few people have become elite performers without excellent coaching. And in the trading world, sometimes there's this pushback for investing in your trading education. And I think that that's misguided. Look at Phil Mickelson. Phil Mickelson is the number 2 golfer in the world. He makes $50 million a year. He has a beautiful wife, beautiful family. He just tried to buy the San Diego Padres, all the money in the world, all the status in the world. And he has a swing coach who works on his long game, who was Tiger Woods' swing coach, Butch Harmon. He has a short game coach, Dave Pelz. He has a putting coach, Dave Stockton. He has a nutritionist, somebody who helps him work on his fitness.
Oh, hold on. Tiger looks like he is a nutritionist. I'm not so sure Phil looks like he's got a nutritionist.
So he has a guy.
There's something hanging over that belt. I'm not so sure about that.
And I think that this is something that he's worked on. So he used to be a little heavier, but he's worked on his strength and his diet. And he also, a really great anecdote is that he never really performed well at the British Open. And he felt it was mainly psychological. And he brought on a psychology coach who he credits with his incredible improvement at the British Open, evidenced by his recent win. And so people who want to become elite performers, and that's what traders are, you're not a 7-figure trader. You're an elite performer.
Hey, to add to your note on Phil Mickelson, though, as you do mention, he does, at this stage of his success and working hard for many decades, he has the ability to pay some of the top coaches in the world. This is kind of like in what Malcolm Gladwell's book that talked about this issue as well. But that doesn't excuse you if you don't have Phil's bank account, because there are tremendous numbers of resources out there that you can dig into. So, that I just don't want to go ahead and have somebody think, oh, Mike is giving an example of Phil Mickelson and that doesn't apply to me. Oh, yes, it applies to you.
So we have in our desk, Michael, we have a team of guys who are ready to assist beyond myself and Steve Spencer, our traders. So they've been taught by me, they've been taught by Steve, and we have outside help for our best traders to continue their coaching. It's something that's our core philosophy. We're always investing in our traders. And so it just never stops for us. So that third thing is critical. That third thing is critical feedback, really, really great coaching to become an elite performer. And the fourth thing is purposeful practice. You can lay out how a person should trend and trade, but they have to actually do the things every day, the rehearsal, to become good at it.
I think that's a good place for us to part ways today. I think it's 100% true. Good conversation, Mike. And once again, the Playbook by Mike Bellafiore, and go check it out. I don't know if you're going to get me to go there. I'm past the point of no return. I'm in La La Land. So, but there's probably plenty of people in the audience that are saying, "Hey, you know what? This guy Covel sounds like a lunatic. I really don't want to listen to him anymore. This guy Mike, this guy Mike sounds a little more pragmatic. Maybe I should listen to him." So, anyways, Mike, listen, it was good chatting. We'll talk soon.
Okay, thanks a lot for having me.
Take care.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.